Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 12th of April, 2017 at 2:05 p.m. Central Daylight Time. All right, if you're watching financial TV as we do or reading the news wires, you know that Rex Tillerson, our Secretary of State, is in Russia. He has met Mr. Lavrov, his counterpart, and President Putin. They've agreed to not agree on many issues. They tried to put out a better, if you will, foot forward that the two powers have to not argue and blah, blah, blah. But the simple fact is Russia continues to say that it was not the Syrians that did the Syrian gas. They knew nothing about it. And, of course, it took off from their airstrip. So the Russians want what? They want the UN to investigate and some type of health organizations or chemical companies to do it. In other words, again, disinformation, and that's what you're going to see. The good news is the two talked. The markets rallied a little bit in stocks and the metals on that news, but what we've really done is just kept gold fairly well bid on all this. The big question for gold is, can it overcome maybe a creeping up dollar? Can it overcome this news over the Easter holiday? Now, do remember, you're not open on Friday, so that's going to be an important event. And it's not just the U.S. This is one of these markets that around the world you don't get a lot of the trading going on. But in the gold, on the weekly chart, as I pointed out yesterday, there is an event on the chart that is bullish. And that is that you had a bullish crossover of on the weekly, the 18-week moving average over the 100. Now, you've already gone up to make new highs on it, so in theory, it's already reached what it should in terms of just making a new high. But ideally, where I think the market should go is the upper Bollinger Band. That would really, as a technician, lock in a nice play on that, and that could be the interesting part of it. Now, we had back here a bearish crossover, but prices were never under the 18-day average. So this is the first bullish crossover in a long period of time. You had one back here too, and if you look at it, the market did from that point on go up to the higher high. So there's no arguing as to what the overall impact often is. The word is often. It's not always. When we take a look at an area chart of closes, I'm marking it now from 1248 to 1278.10, which is where the market finished today. So it's staying very close as the trade still goes to where it's settled at 1:30 Eastern Time, 12:30 Central Time. You can see how the market is reaching up, and you can actually see here how the breaks are being well supported all the way through. And when I put the swing line on, you do have the pattern of higher lows and higher highs, so that's bullish. The market is over the 18-day average. It hit it yesterday, and since that, actually it was 2 days ago, it hit it, and it has since rallied very sharply on that. What bothers me is that you're now 2 days in a row over the upper Bollinger Band, and you only stay over that number 5% of the time. Now, I've done studies, and those studies say that 5 to 7 is typically the most in a row that you stay over an upper or lower Bollinger Band. So staying over it means typically you have maybe the most 3% left chance if each day counts as one of those 5%. That's how I view it. So we'll see if the market pulls back. What often happens when you start getting up to that number, if you have an embedded reading, you don't get much of a break. You don't have the embedded reading, though. So the break, if it comes, and that's a big if, I don't know if it'll come or not, could be any size. Support should come in around the 1255 level right now, the 18-day average of closes. You break the chart pattern if you take out 1248.20. In the gold ETF, you are up and over the upper Bollinger Band. Now, we don't have the settlement yet because that will finish the day at about 3 o'clock. But we know that it's over it. We know it's overbought like the future, so no embedded readings. And the gold miners are paying more attention to the theory. They have pulled right back. They were over it most of the day. Now they're sitting here 2 cents under that upper Bollinger Band with an overbought condition. Riding it is different than staying over it, so just keep that in the back of your mind. But all of these elements in the gold are bullish. None are bearish until you break the pattern or close under their 18-day average of closes. In the gold-silver ratio, now I want you to look at the months. I'm moving to the July silver versus the June gold. You can see how it peaked out 69.70. It's around 69.54. But because it's in an upthrust, it means that gold is stronger than silver. It means that instead of 68 ounces that you needed to get an ounce of gold, or 69, you now need 69 and a half to get 1 ounce of gold. When I look at the daily chart just of silver, first eye, overbought. Second, higher high, lower low. So support's done its job at that 18-day average. The theory is, that as long as the market's over it, it has an upside bias, but you've run out of your steam. It's certainly not a chart that looks like gold, which has the swing line with higher highs, higher lows in all the products and the ETF. And here in the silver ETF, you got the lower low, you got the higher high, and now the question is, today's high at 1740 didn't take out 1742. Should we start dropping back? You could say then, tomorrow, that you'd have lower highs and lower lows. The negative for saying that is you're still over the 18-day average, so the two fight each other. Just an overbought market right now. Copper is falling apart. Simple term. Lower highs, lower lows. Remember what I pointed out to you yesterday. I'm pointing it out again. You're on the cusp of getting a swing line, moving average, where the 18-day is about to go under the 100. Could happen as early as tomorrow. We'll see if that occurs, and that's often a bearish sign. Even with the oversold condition, it's not a good thing for this market. And by the way, copper is now its first day under the lower Bollinger Band, so I wouldn't be surprised to get a rally in the market for a day or two, but that's a very longer-term bearish element taking place. In the platinum market, you have that pattern of a higher high, lower low. The market keeps hitting the combinations, in plural here, upper Bollinger Band, 100-day average 18, to lower Bollinger Band, back to the 18 and the 100-day. It doesn't know what it wants to do. It's becoming one of these markets that says, sell me on the rally to the upper Bollinger Band, buy the lower one, which over time is a surefire way to get yourself annihilated in the market. It's a contra-trend theory, but when it starts trending, how do you know what's going on? In the palladium market, you're in a downtrend. You suddenly have lower highs, lower lows, and it looks like you're going to settle under the 18-day average. Next goal could be 781.70 as long as the market doesn't take out this 806.90 level, so I'll be looking at that. Dollar index, as you know, I've been saying I thought this market had reached a peak here, which it did. It's backed off from there, and now the question is this all that she has? In terms of momentum, you just have an overbought condition that is not corrected, so that favors sideways to slightly lower action still in that market, and that's pretty much how you have to, I think, view it. Are we going to get more of a rally in the foreign currencies late in the day? You might, so you've got to keep your eye and see which way this all wants to get together. But we write about this for you. Now, these are the different categories, and you can pick which ones you want to get 2 weeks of our market information. If you're a hedger, if you're a grain specialist, meat, a metal specialist, we really write a lot of detail about this. How do you get it? Just call us, 866-973-2077. You can go to our website and choose. You'll see the Linn Research. Choose the categories you want. You can click up here. If you're watching me on YouTube, you'll see an icon. Fill out what you need. You'll get 2 weeks of this. You decide for yourself. Does this look good to you? I'm Ira Epstein. Talk to you shortly.